Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you for making time today.
Thank you for having me today.
As we just heard, stocks in the U.S. continue to rally, the S&P in positive territory now for the year. What's going on Wall Street and the global markets?
Yes. As you said, on Monday, Dow Jones surged 462 points, or 1.7%, to 27,000 plus. And the S&P 500 climbed another 39 points, or 1.2%. Also, Nasdaq was up by another 1.1%, hitting 9925, a historical close of highest ever. However, though, today, if you look at the U.S. stock index futures, it is edging lower, pointing to modest losses as investors trying to digest the strong rally in the previous session. The reason for the strong rally that we saw yesterday is because the hope for economic recovery that seems to be coming through quite nicely. And the Federal Reserve moved to expand the scope of its Main Street lending program by lowering the minimum loan size to $250,000 and extending the loan terms to 5 years. So clearly, there's a huge support by the central bank affecting continuous rise of the overall equity market. Right now, though, on a fundamental basis, U.S. market, particularly on the S&P side, seems to be fairly reasonably valued at this point in time. So we might need some take a breather time, even though that liquidity is record high level where the M2 growth rate is over 23%. So we need to watch out for the next few days how much of the losses that we might see from the equity market, or how long it might last in terms of the taking breather time or in the future.
Well, the rally continues in Korea as well. Day 7, I believe, of the rally now. Tell us about the Korean markets.
Right. Even though the Korean markets continue to rise for the last 2 days, in terms of the movement, it's not that positive. If you look at yesterday, it went up as high as 1.6%, breaking well above 2,200 level, but it closed at only 0.1% rise and closing below 2,200. And that happened today again. When it started, it was very strong, and it broke above 2,200 level, but it fell as much as 0.84%, and it closed at below 2,200 level again. Obviously, continuation of concern about the overall economic condition and the COVID-19 issues, and maybe the valuation might be looking expensive on global scale. People are concerned about the Korean market at this point in time. However, though, we think that the overall valuations for Korea seems to be still very cheap, and that the foreign investors' net selling should be reasonably stopping at this point in time. And the Korean won seems to be fairly stable at 1,200 range, which is quite positive for foreign investors' investment trend. So all in all, there's a concern about the correction because of the strong rise that we saw from both KOSPI and KOSDAQ. But other than that, we think that the taking breather time, or the taking somewhat of a losses in the future, it's not going to be that strong. And also, if the earnings comes through for the second quarter and third quarter, then it will have another momentum to rise further. In any case, right now, we might need to take some resting time for the equity market.
Well, now the Fed's Open Market Committee is meeting this Tuesday and Wednesday. We should get some idea about where policy goes from here. What do you expect to hear from the Fed?
Sure. I think we need to watch out for how long this zero rate will last, and also the economic projection, how strong the recovery can come through in how long period. And also, market seems to be trying to get some clues to how Fed would respond to inflation if it actually comes through, and if the inflation rises quicker than expected with such high level liquidity injection that we saw in the last couple of months. Clearly, 23% plus of the M2 growth rate is extremely high. That is about twice higher than what we saw in the 2008 cycle. So too much ample liquidity might relate to lead to inflation numbers coming through at much higher pace. If that's the case, then the contraction of liquidity could happen quicker than expected. So we need to watch out how aggressive the inflation number might be coming through and how aggressive the Fed will decide on in terms of the interest rate environment. So some people might say that the Fed needs to do negative interest rate, but I don't think that that's necessary at this point in time. And we just need to see how long this zero rate can last and how long this liquidity injection can last.
Got it. All right, Mr. Yu, we'll have to leave it there for today. Thanks so much for coming on.
Thank you very much.